Welcome back. You're watching us here on Halftime Report. It is that time where we're seeing some bit of a sell-off from the top. In fact, the Nifty is now moved into the red. The Nifty Bank's outperformance is also, while it is still outperforming, holding barely in the green. We are seeing it come off highs, and the mid-cap index too is currently in the red. What are the stocks which are taking the Nifty lower right now? We do have a lot of these FMCG names. Reliance actually should come up for you, apart from all the other FMCG names. Reliance, by virtue of its weight, Reliance and L&T, both of them are the ones that have that are responsible for dragging the Nifty lower. Reliance is at the low point, corrected about 1% from the highs, and L&T is the other one which too has moved to the low point of trade. But by and large, the Nifty Bank is still outperforming. Let's talk about the happenings in the F&O space right now. We are seeing the advance decline for the second day running in favor of advances. The Nifty Bank is above, its 20-day moving average as well of 43,155 odd. So that 43,155 odd should be an important support to watch out for. For the Nifty, the 18,200 put writers are still active in today's trading session. And that would mean that the 18,200 put, which has a premium for almost 100 odd rupees, would mean that 18,100 would be an important support to watch out for. We are constantly seeing some writing at the 18,100 put as well. So 18,050 to 18,100 is a level where bulls are seeking support, notwithstanding the decline that we've seen right now. The reason why the Nifty would have fallen is that at higher levels, it is running into resistances. We have the 20-day moving average as well as the 50-day moving average between 18,200 and 18,300. So those would be important resistance marks to watch out for, which is why we continuously saw a fair amount of writing at the 18,250 call. Almost 50 lakh shares in open interest at the 18,250 call for a premium of 50 rupees, telling you that 18,300 would be a resistance. Important index to watch out for the second half, like we've been pointing out, will be the Nifty Financial Services. It is upwards of 18,253. Let's watch out for the 18,500 mark as well, primarily because it has the weekly expiry on this index. What are the couple of stocks that you have to watch out for today? HDFC Bank as well as Bajaj Finance, because these two have a heftier weight on this index, and both of them are also expected to report their pre-quarter updates. So some positioning around that would be something that we'll be watching out for. But how does that pan out for the technicals of the market? Sachidanand Uttekar joins in. Sachi, wish you a very happy new year. You join us for the first time in 2023. Your thoughts for the market right now and individual stocks?
Good afternoon, Mangalam. Happy New Year to you, the entire team at CNBC TV18 and all its viewers. Well, if you look at the last a few weeks, we have clearly been on the sell-on rise mode. The journey or the pullback from 17,780 has been really good, but on its way up, we also saw a dark cloud cover kind of formation on the 30th of December, price action. So clearly the resistance at 18,265 is significant, and unless we don't see a closing getting established above the same, the pattern implication would be on the bearish side. So again, if you look at last two trading sessions, Nifty is managing itself within the 5-day MA support, which is at around 18,150, and the 20-day MA resistance around 18,260. So even today, the price action was somewhere within this particular range itself. So right now, we clearly see that the indicators or the trend strength indicators are still favoring fresh short positions. So right now, I think the pullback is another opportunity to create some shorts here. Journey towards 18,200 should be utilized to create fresh shorts. The stop loss should be placed at around 18,280 on a closing basis. And we are expecting the Nifty to again slide back towards 18,040 levels. So as of now, I think it's better to deploy some shorts. We are near to that resistance zone, and the reward to risk is favoring fresh shorts itself.
Okay, and what would your individual technical picks be?
Well, if you look at Maruti, I think the structure has been clearly on the negative side. Again, we saw it slipping below its 5-day exponential moving average, which is placed at around 83.80. It also surpassed or breached below the previous day swing low. So we are expecting further weakness to seep in. Fresh shorts to be deployed in Maruti with a stop loss at around 8430 and a pattern target of around 8120.
Okay. Can you quickly tell us what your call would be on a lot of these banks, say South Indian Bank, which is up 5%, CSB, which is up around 6%. A lot of them are reacting to positive news, but technically, how would you approach them?
I think when it comes to PSU banks, we've already seen a good, strong outperformance. But if you look at Nifty Bank itself, we are seeing that the resistance around 43,300 is significant. If you look at a stock like SBI, which is the prime leader within this particular pack, it has been facing a lot of resistance around 620. So I think this is a good time to, reduce your long exposure and probably look at, taking some contra bets near to this resistance zone. So right now, we stick to the FNO guys. I think SBI is one particular stock which has given us a good pullback move, and probably a move below 605. It can again start, trending lower. So we are, cautious when it comes to PSU names, and SBI would be our top pick on the sell side.
Okay, all right. We're going to take a break on that note. Thanks very much for joining in and talking to us. Well, on that note, let's get in some important market